mics are working, so that's good. I'm John D'Agostini, co-head of banking. Thank you all for coming today. I'm extremely excited to have a fireside chat with a friend and wonderful entrepreneur, Peter Smith of blockchain.com. He's the executive chairman, CEO, and co-founder of the business. He's seen many cycles in the crypto space. He's been building, innovating, and pushing the levels of what it means to run a modern broker-dealer on the rails of blockchain and crypto. So I would love to give him the opportunity to firstly tell the audience who blockchain.com is. Peter?
Yeah, sure. And, good morning. It's always fun to see who's awake for the first session of the day after the dinners the night before. So blockchain.com is a financial services business for the crypto market. So what do? We are a retail brokerage, which is sort of the historic start of our business. We have about 39 million verified customers in that segment. We offer users the ability to trade about 600 assets within that experience, which is a sort of a brokerage trading experience. They also can send and receive crypto. They have a full DeFi sort of power user experience within that account as well. And they have the ability to sort of earn interest on their deposits within that experience. The second thing that we do is our institutional prime brokerage. We have about 1,500 active clients around the world in the institutional segment. We are primarily focused on serving other crypto institutions. So most of our clients are crypto hedge funds, crypto VC funds, foundations that launch new protocols, as well as sort of crypto high net worths. And that business we got into sort of at the very beginning of institutional crypto in late 2019, and is now probably our largest segment by revenue most quarters. The last thing that we do, we call blockchain market services, or BMS. That's an infrastructure business where we help bring new companies and protocols to market. So most of the folks looking to launch a new, for example, stablecoin, like a decentralized money market account, they're going to need token distribution, they're going to need market liquidity, custody, really a wide range of services to go from sort of an idea to something that fully exists and is useful in the market. And we sort of do long-term partnerships to provide our infrastructure and help get those things to scale into velocity. And we've done a lot of that over the last year. Actually, we've had a lot of growth in that segment. We got our original start 12 years ago, which is kind of fun to think about, building the first website where you could look up data for Bitcoin. Mm-hmm. And so the very beginning of the business was in data, and lately that's come back around. So for the last 10 years of crypto, no one was really willing to pay for data. And in the last year or two, people have sort of the market for high quality data about the crypto world has sort of come back around. And so we're increasingly back to our roots in the data space as well. John was saying, I've been around for some market cycles. I've actually been around and been CEO through every market cycle. And there's only two of us that can say that. And somehow we're both still not insane. Or maybe we were insane the whole time.
Perfect. Well, that's a good segue into market structure. How would you describe the current market structure for digital assets today, since you've seen so many cycles now?
I think there's, you can talk about like the market structure around like the price or the market structure around the way it's working. I think, because I'm going to get this question a lot today anyway, I think the price, look, crypto pulls back a lot. Since the 2022 bottom, we've seen it pull back at least 20% 4 times, and we've seen it pull back 30% roughly 3 times. This is the third time of that 30%. So I don't think it's the end of the world, and I think people get overly excited about these 20 and 30% pullbacks. And I think the market is largely constructive. I tend to look and see okay, what happens once the open interest or the leverage has been wiped out? So, when I'm looking for, is this a market bottom, or is it continuing to fall? Where does the market level out when the leverage in the space resets? We saw that leverage reset around, 88, 90. And so I think that's probably where that pullback ends. But you never know. I think you have to kind of zoom out and look at a much wider time frame. One of the most interesting things about sort of crypto coming into TradFi, and there being more and more TradFi people that I talk to every day, is I'd say TradFi folks or new folks coming into crypto are much more focused around the weekly close of the price of Bitcoin than I'm used to. Um, I think on the regulatory front, which is like where we spend a lot of time these days, right now there's an extremely fragmented regulatory picture in the United States. I think in Asia and Europe, there's a very unified regime now, particularly in Europe with Mika, where we just received our license. I think in the US, you don't have a national structure yet. You basically are regulated through a patchwork of sort of money transmission licenses, as well as sort of FCMs or broker-dealer licenses, none of which sort of totally makes sense. And definitely the collective of all of them together makes very little sense. That said, next year, it was going to be this year, but hopefully next year, we're going to get a U.S. national market structure bill. And there have been a lot of productive talks with the administration about that. And we're pretty optimistic about what the future of regulatory looks like in the U.S.
Perfect. I think that's a good segue into the Clarity Act. How do recent policy developments, especially the Clarity Act, impact digital asset adoption at the institutional level in your view?
Yeah, I think that the certainty or sort of the enthusiasm and belief that folks have that the Clarity Act will pass in some form has led a lot of TradFi institutions get involved in the crypto space that, frankly, either weren't historically or had pulled out historically. And so I actually don't think that there will be a big change when the Clarity Act passes, because I think to some extent market participants have kind of already front-run participation. Like they wouldn't have gotten back into the market if they didn't think it was passing, and now they're back.
Good. Do you, tokenization, let's change a little bit to tokenization. Where do you see tokenization seeing real traction right now and in the next 5 years?
5 years is a very long time. So that's hard. I'll come back to that. Right now, tokenization's like killer use case so far is obviously stablecoins. And people love stablecoins. Mm-hmm. And it's kind of an amazing thing when you think about it. Like when I got started in this, if you told me that we could put like basically the equivalent of $1 checking account in 40 million of our customers' pockets all over the world in 100 countries, I would have been probably pretty shocked. So I think stablecoins has definitely done it. I think the next place that we're going to see product market fit is on tokenizing very common U.S. financial instruments. What I mean by that is like, Tesla stock, Meta stock, indexes, I think even some debt instruments, like treasuries, we're seeing a lot of growth in. I don't know that, we'll actually see like, all the entire S&P 500 tokenized in a way that people really engage with. We have a pilot running right now where folks are trading tokenized version of U.S. securities in Nigeria.
Interesting.
We have a very rapidly growing business in Nigeria. As we were one of the first two to get a license there after they shut down Binance and put a licensing regime in. And we've been shocked at the uptick from folks using like tokenized stocks on chain in Nigeria.
So you'd say the trend really is global for U.S. equities first?
Yeah, I'm not sure. Yes, I think people will tokenize things that are American, because America has the best financial system, or at least a financial system that enables you to make the most money. So it's probably the best. And we'll take those tokenized version of U.S. assets to export overseas. And whenever I say this, people are like, oh, well, like maybe we'll tokenize stuff in America, so on and so forth. I like to remind people that very little is settled with stable coins in America. Like, I'm not, paying you back for dinner with stable coins in America, even though like we're both crypto people. Like, you'll send a Apple Cash payment or Apple Pay. Sorry, not Apple Cash. I just combined two companies there. You'll send a Venmo or whatever. Whereas like overseas, you see a lot of stablecoin usage. So I don't expect like American market participants or American consumers to actually use tokenized assets for a very long time.
Got it. With the current SEC, do you expect clear rules to accelerate tokenization?
Yes, I think that the SEC's listed a lot of guidance, mostly which is like, don't be a fraudster and have fun. I'm kidding. It's not quite that broad. But I think that, for the most part, the SEC is extremely constructive now. Went from sort of the opposite end of the spectrum to where it is now, which is really constructive. But I do think for like really big investment to go into some of these things that we all like to talk about, the regulations actually need to pass. Because what we've learned is like if the SEC can flip from very negative to extremely positive in 30 days, it can certainly flip back from very positive to very negative in 30 days, right? It won't flip, that won't flip for 3 years, but it could flip in 3 years. And so I think people want to see, over the next 2 years, regulation pass and consistency brought to the market.
Perfect. Do you think the thought and potential for regulatory clarity is really driving the traditional finance folks stepping into crypto at this moment?
I think the traditional finance folks stepping into crypto at this moment is a reflection of revenue. So the fact that why is ClearStreet in crypto fundamentally? Not that you guys are totally traditional, but you're sort of in the middle, right? In hybrid. Like, you guys are in crypto because you're making a lot of money in crypto, and because the amount of regulatory risk that you're running to make that money has fundamentally come down, right? And ClearStreet obviously was, sort of in crypto through the worst periods. Actually, you guys got started in maybe the absolute worst time to get started. But like, that's fundamentally still the trade-off. And I think, when you go and talk about sort of even bigger institutions like, Goldman being back in crypto, Citigroup being back in crypto, JPM being back in crypto, like, it's that trade-off of how much money do they think they can make versus, how much regulatory risk do they think they're running.
Okay. Well, to that end, do you think traditional financial institutions will be able to ride the cycle?
I think some have shown that they're able to. So, an example of that is the CME, which sort of like launched and has stuck with it, hell or high water. It's very impressive of them. Some are going to continue kind of coming in and out based on sort of what is shifting in the wind at the time. I think it just kind of comes down to who's in charge of these places and sort of whether they have a long-term vision around what the market's going to look like, or they're sort of chasing a short-term trend.
Got it. We've spoken a lot about institutional, similar things on the retail front. What do you think will happen in the regulatory framework that will accelerate retail adoption and get more people trading on chain?
Well, I think, ironically, in the U.S., that is what you've had regulation for, because we've all fallen under this money transmission sort of framework, which is the framework a lot of consumer finance companies fall into that have been built in the last 10 years. What is kind of more interesting to me is twofold. One is how we're going to handle U.S. retail trading more advanced or sophisticated products like perpetuals or derivatives.
Mm-hmm.
That is very much sort of being figured out in the Clarity Act. I think it's one of the bigger sticking points in the Clarity Act is, if you can go into Robinhood and buy one-day options, that's like a thing that's coming is one-day options.
Yeah.
So if you can go into Robinhood and buy one-day options, why can't blockchain.com offer perpetuals to American customers, right? Hopefully, that becomes enabled by the Clarity Act. In Europe, on the other hand, there's been very little clarity about how you sort of provide a regulated retail business. And MiCA, which just has, came out last year, folks are now getting their MiCA licenses this year, that has brought clarity to sort of the retail space in Europe.
Got it. Shifting gears, since this is a disruptive tech conference, the intersection of AI and crypto. How is AI intersecting with blockchain and crypto over the next few years, in your opinion?
Well, I think there's going to be two areas that it interacts. One is around payments. I think the payments in crypto and AI crossover is going to be really huge. The second is around financing of the networks. So there's going to be kind of two trends there. The first is that, and it's kind of hard to get a lot of consumers, particularly ones in developed countries, to use crypto for payments because it can be slightly less convenient. Like you need to log in and you need to see like, okay, I'm going to send Peter some money on Polygon, some USDC, this, that, the other. It's like takes a minute to figure it out sometimes. And so humans are actually really in the search for convenience more than we are the search for efficiency or low cost. We like to believe that we are sort of like relentlessly optimizing our cost, frameworks as humans. We're not. We're like optimizing convenience.
Yep.
And we see this in our consumer data all the time. Machines, on the other hand, are relentlessly optimizing for efficiency. And so I think over the next year or two, probably 2 years, you're going to get these AI agents that are taking care of your payments for you. They're taking care of your daily financial life for you. Like you're waking up to something in the morning that's like, would you like to tax harvest these positions? Your power bill is due, and say yes, and I'll do all these things for you. And I think in that world, the LLMs and the agents are going to be really looking for efficiency more than they're looking for convenience, because it's really easy for them to run all those, things in the background to figure out how to efficiently make your payments. And so there's been a lot of, talk over the years of what is going to make it easy for consumers to do payments with crypto. It's going to be AI agents that essentially automate almost all of this stuff in the background for you. The second place they're going to interact or intersect is the financing.
Yep.
So, it's massive CapEx to build these things, which means that for the most part, the compute networks are getting built by 3 or 4 companies and 2 governments on Earth. At some point, it's probably going to be seen to be a bad idea to have sort of 6 or 7 entities controlling all of the compute that makes our daily life happen. And I think that crypto will be sort of the only way to finance large sort of build out of compute that is sort of more of a common good and can have sort of be owned by 1,000 people or 100,000 people or 1 million people. Because, face it, I don't know if I, 3, 4, 5 years from now, want all the compute that I rely on for daily life to be owned by 1 or 2 companies based in San Francisco. But I think because of the extreme CapEx required, it'll be the only way to finance this stuff at scale. People think that sounds a little crazy sometimes, and I'm always keen to remind them that Bitcoin, before AI, was the single largest build out of compute power in the history of mankind. Right? And so, we've done it once in my industry, and we'll do it again.
Great. And how do you think crypto companies like blockchain.com and some of your peers will work with AI companies in the future?
Yeah, so in our case, it's really simple. We this year built a platform for agents. It's called June AI, and so there's a bunch of custom LLM models in there. You can link that with your blockchain account. You can deploy agents within your account, and so for us, it's very we're not building a compute network, at least yet. Yep. We are very focused around how do we take these LLM models and agents and make products that are more useful for customers.
Got it. Are there any specific areas, risk management, compliance, transaction automation, where you think AI could accelerate crypto adoption?
Transaction automation, yes. I think, compliance, customers don't really care how you do compliance. Regulators do, your banking partners do, but I don't know that customers are ever really jazzed about how you do your compliance. They're usually just annoyed. I think actually if you tell your customers that it's AI agents doing compliance on their accounts, they might be upset about it. But I do think it will make companies more efficient, and it already has. Our business is larger than ever today, but we really have been flat headcount for the last 2 years. And that's less that we haven't hired anyone, and more there've been a lot of roles automated, and then other people hired, in roles that could not be automated.
Yep, that's definitely seems to be a theme. What's the first steps corporates or banks should explore for tokenizing assets if they wanted to get involved?
I think they have to step back and ask themselves why they're tokenizing an asset. So I've seen a lot of tokenization for the sake of tokenization, And I think it's okay. Like if you fundamentally you're like, hey, I want to tokenize my stock so I can do a press release that says I tokenize my stock, that's fine. But if that's the only goal, like, we should all go into the situation aware that that's why we're tokenizing it. So I think the first thing to do is to step back and think about why, because that's going to sort of guide all of your answers that go downstream from there.
Good. And if you had to sum up the opportunity in one sentence, what's the case for embracing tokenization and AI now?
Well, I think those are two very, very different things.
Embrace both.
But they both kind of come back to the same idea, which is, with technology, you can either be on the early end of the adoption cycle or you can be sort of middle or late. And I think there's no point in being in the middle. The middle is sort of none of the downside of being, sort of none of the upside of being early, and none of the upside of being late. Regulatory clarity. And so I think with tokenization and AI, like there's going to be such transformative trends over the next 10 years. You almost have to be early. You can't be late on these things. And so if you're going to run that sort of organizational risk, you might as well run it as early as possible and take advantage of being early to that cycle.
Got it. And as we progress in this part of the cycle, how do you think blockchain.com will lead these trends of AI, tokenization, and the intersection of all of them together in 2026?
Well, we were the first people to put out like a independent crypto and LLM and AI agent platform in terms of like companies that were at scale. So we've definitely been leading on that front. I think that will continue. And that's been way more complicated than I would have guessed it would be. Turns out there's a lot of data privacy stuff that you have to deal with. There's a lot of sort of performance issues around the compute that are quite necessary to solve. And so we'll continue to sort of push there and make new gains on that front. I think on the tokenization front, the most interesting thing that we'll do is really bring more U.S. financial assets to our overseas customers. Like I was sharing before, I don't think that our customers in North Carolina really need to try to tokenize Google equity. Like why not? Maybe, but I don't know if it's like at the top of their urgent list. Whereas I can tell you that even our customers in Italy, for example, like one of the things that they'll say they most want at the top of a user feedback is access to U.S. equities.
Interesting.
Like I think we take it for granted because we can sign up for a Robinhood account, and to a certain extent in the UK as well, they take it for granted. You can sign up for an account with a neo broker and trade equities in a single day. The vast majority of the world does not have access to U.S. capital markets, and so the thing I think that we're pretty excited about on the tokenization front is expanding access to U.S. capital markets for sort of people and institutions all over the world. That to me is really exciting on a personal level because I got into crypto basically to increase and empower human economic freedom. Like the mission of blockchain.com is how do we build products and services in crypto that increase human economic freedom. I very much got into crypto to lower sort of the barriers and sort of make finance and financial services more equitable. That just because you were born in Nigeria didn't mean that you had to forever be screwed over by the fact that you were in Nigeria, right? And so like this sort of new revolution of being able to export U.S. markets and U.S. assets and lower those barriers globally, I think is going to be a really exciting few years.
That's awesome. And in closing, are you optimistic about the future? If so, and why?
And this is something that I love debating with people about on Twitter. How many people have a fake Twitter account that they use?
Kind of.
Okay, very few of us. I gotta say, if you are an X or Twitter user, get yourself a fake one because it really improves your experience. It's really fun once you're no longer worried about people, canceling you for your Twitter. But one of the things I love arguing with people about on Twitter is, or Reddit, which is even better, is it is very trendy to be a pessimist, to be sort of a doom and gloom person, it gets a lot of views, right? Like, the real tweet of life is like, hey, you're living at a unique moment in history where the gap between the middle class and the extremely rich from a daily lifestyle basis is the narrowest it's ever been, right? The sort of like human health component is the highest it's ever been. Like, like you can get in a plane and fly to almost anywhere in the world for less than $1,000. Like, that is insane. Like 60, 70 years ago, it used to take you weeks to get anywhere, even by flight. Like, we are living in some of the most amazing times in human history, and we're going to live through the transition from knowledge being really valuable, from intelligence being really valuable, to knowledge and intelligence essentially being free, the transition to AI. Like, that is an incredible opportunity that we all have and incredible times that we all live in. So to answer your question, I'm sort of always like very, very measured about the next 3 or 4 weeks of my life, because I've been in the crypto market for too long. But I'm really optimistic about the 5 and 10-year horizon, not just for crypto or digital assets or tokenization, but for like human life and human progress overall.
Well, we appreciate your time, Peter. That's a wonderful chat, and look forward to more things from blockchain.com.
Thanks for having me. Cheers.